Welcome to The Explainer. Today we're unpacking a really wild day on Wall Street, and we're going to do it using the live analysis from philstockworld.com, which is just a fantastic example of the kind of real-time insights you find there. Okay, you gotta love this quote. It's from the AGI roundtable at philstockworld, where their advanced AI entities hash things out. This one line just perfectly nails the massive contradiction the market was dealing with today, December 11th, 2025. So the day kicked off with this classic tug of war. In one corner you had some really good news from the Fed, and in the other corner, some shockingly bad news from a huge tech company. It was a real battle for control. On one side, the Federal Reserve gave investors exactly what they wanted: another rate cut, plus a fresh $40 billion a month in cash getting pumped into the system. That's the rocket fuel we were just talking about. But then Oracle came along and just crashed the party. The stock took a 13% nosedive before the market even opened. Why? Because they basically admitted that all that money they're spending on AI infrastructure, it's not turning into revenue nearly as fast as everyone hoped. That's your fragile cargo right there. And this conflict, well, it literally split the market in two. It poured gasoline on this fire that philstockworld has been tracking for its members, a phenomenon they call the Great Rotation. It's where money just rushes out of one sector and into another. And you can see it plain as day on this chart. The money just fled the tech-heavy Nasdaq. But where did it go? It poured into small-cap stocks and those old-school industrial giants in the Dow, pushing both of them up to brand-new record highs. The takeaway is pretty clear. For one day at least, investors decided they preferred the real economy, banks, factories, mining companies, over the big AI dream. The tech sector, which has been on an absolute tear, just smacked right into a wall. So the market's sending all these mixed signals, right? What in the world are you supposed to do with that? Well, let's peek inside the philstockworld.com community and see how they broke it all down. And this is what's so great. It started with a member asking the exact question on everybody's mind. This led to a really deep analysis from the site's founder, Phil Davis, who you might know is recognized by Forbes and Seeking Alpha as a top market analyst. And the answer they came up with? They're calling it a Schrödinger's market. They explained there's just so much cash out there with nowhere else to go, which creates this illusion of a strong market. But it feels less like a bull market and more like, a hostage situation with champagne. And Phil just brilliantly cut through the noise with this point about the massive disconnect between a record-high stock market and what's actually happening for most people. He pointed out that the U.S. added $2 trillion in debt just to stay afloat, a critical detail you don't always hear. And here's where you see the incredible educational value in action. Another member asked about an options trade, and Phil himself jumped in and gave a masterclass on why being cheap on your entry can actually cost you thousands in the long run. I mean, this is the kind of direct mentorship that has helped train top hedge fund managers. It's what makes the community so special. All right, so let's fast forward to the closing bell and see how this whole tug of war finally played out for the day, because the numbers really do tell the story. So the final scorecard confirms that great rotation we were talking about. We got record highs for the S&P, the Dow, and the small cap Russell 2000. But big tech, you can see it in the Nasdaq, they ended the day in the red. You'd think the story would end right there. Tech gets a black eye, the real economy takes a victory lap, but nope. Just when we thought it was over, we got a big surprise after hours. So after the market closed, another key AI player, Broadcom, was up to report its earnings. And you can bet the entire tech sector was holding its breath. Was this going to be another Oracle disaster? And no, it was not. Not even close. Unlike Oracle, Broadcom came out with a strong report. They beat expectations, and they basically signaled that the big AI build-out is still very much alive and well. The stock just took off in after-hours trading. So this sets up a massive cliffhanger for the next trading day. Was Oracle's terrible report a warning shot for the entire AI sector? Or was it just Oracle stumbling over its own feet? Broadcom might have just saved the day for the tech bulls, leaving all of us wondering what happens next.